especially today, because look, we're crashing, like it or not. The question is, how will you survive it?
I want to say is this, it's the biggest opportunity in the history of the world. This crash is going to be so big, and look at that red board again. I don't think any more quantitative easing can start it. Even if they solve the coronavirus crisis, it's still going to crash.
Yeah.
Hey there, financial enthusiasts. Welcome back to Finance Fundamentals. Today, we're delving into the mindset of one of the most prominent voices in the financial world, Robert Kiyosaki. As the author of the bestseller, Rich Dad, Poor Dad, and an influential speaker, Kiyosaki has captured the attention of many with his bold predictions about the future of the economy. In this video segment, we'll delve into Kiyosaki's belief that the economy is teetering on the brink of a crash. We'll explore the key points of his arguments and take a critical look at his reasoning behind this alarming forecast. We will talk about some factors that could have an impact on the economy and could lead to a recession. Kiyosaki's concerns about an impending economic crash revolve around a few key points. First and foremost, he highlights the widening gap between the rich and the middle class. According to Kiyosaki, central banks around the world have been printing money at an unprecedented rate, leading to inflation that erodes the purchasing power of the middle class while benefiting the wealthy who can invest in assets like real estate and stocks. He also points out the ever-increasing levels of consumer and government debt. Kiyosaki argues that the burden of this debt will eventually become unsustainable, putting immense pressure on economies globally. As interest rates rise, servicing this debt could become a colossal challenge, leading to a domino effect of financial instability. Another aspect of Kiyosaki's prediction revolves around the shifting nature of jobs and employment. With the rise of automation and technology, traditional jobs are at risk. Kiyosaki believes that the traditional education system is not preparing individuals for the changing job landscape, which could result in widespread unemployment and further economic strain. Furthermore, Kiyosaki has expressed skepticism about the resilience of the stock market. He warns that the market might be in a bubble, and a correction could lead to a crash that ripples through the entire economy.
The reason I call it God's money is you can't fake it. You know, you can fake it with a fake ETF, like a gold ETF or a silver, which I don't touch because it smells as bad as the guys that printed that crap. You know what I mean? Jesus. But this is real money. So you look at this here. When I first started buying that, that was $1.40.
Yeah.
Today, that's $16.
Kiyosaki's advocacy for precious metals is grounded in a deep understanding of history and economics. He points to the fact that gold and silver have been used as forms of money for centuries, acting as a store of value in times of economic turmoil. According to Kiyosaki, their intrinsic value has remained remarkably stable over time, making them a reliable hedge against inflation and currency devaluation. We can see that the price of gold has increased over the past few years. This has also proved that the economy of today is not standing that strong. Expanding on the discussion of precious metals, Robert Kiyosaki's perspective on gold and silver extends to their accessibility for individuals with limited budgets. Kiyosaki argues that gold and silver are unique investment options that allow even those with modest financial resources to participate in the wealth preservation game. Unlike some traditional investment avenues that might demand substantial capital, precious metals can be acquired in smaller quantities, making them a practical choice for small budget investors. Kiyosaki underscores the concept of sound money in this context. He believes that owning gold and silver, even in small amounts, provides a sense of security because these metals have maintained their value over centuries. This means that regardless of economic fluctuations or currency devaluation, the inherent worth of gold and silver tends to endure. This aspect is particularly advantageous for investors with limited resources who seek to protect their savings against potential financial turmoil. Furthermore, Kiyosaki often highlights the simplicity of investing in precious metals. Unlike complex financial instruments, purchasing gold and silver can be straightforward, requiring minimal expertise. This accessibility makes them an attractive option for those who are just starting to explore the world of investing. But it's not just about buying gold and silver and waiting for their value to increase. Kiyosaki emphasizes the importance of understanding the market, staying informed about economic trends, and making informed decisions. He suggests that investing in precious metals should be a strategic move, aligned with your overall financial goals.
Thank you for sharing
And
your time with me.
inflation makes life harder
That's right.
on the working class. You see, when Biden shut down the XL pipeline, what that did was create inflation. The first thing they do is increase the price of oil. When you increase the price of oil, you cause inflation. And when you cause inflation, thank you, Jesus, but I get richer. The rich get richer with inflation.
Kiyosaki doesn't stop at the inflation concern. He also draws attention to the potential consequences of ballooning debt on the employment landscape. He suggests that excessive debt burdens, both at the government and personal levels, can create a cycle of economic strain that ultimately leads to job losses. When governments find themselves struggling to service their debts, they might resort to austerity measures, cutting public spending, and reducing government jobs. Additionally, businesses burdened with debt might face difficulties in expansion and might resort to layoffs to cut costs. This chain reaction of debt-induced unemployment can have a far-reaching impact on economies, exacerbating the challenges individuals and families face. Kiyosaki's call to action: focus on financial education, reduce personal debt, and explore avenues that provide more stability in the face of potential economic turbulence.
The coronavirus and the coming crash, financial collapse possibly, marks the end of the industrial age and the beginning of the information age. It's a very big move. And the people that are in trouble today are people still stuck in industrial age thoughts.
Shifting our focus to the broader global context, Robert Kiyosaki underscores the potential consequences of significant geopolitical events on the world economy. The ongoing conflict in Ukraine and the enduring grip of the pandemic are two factors that Kiyosaki believes could contribute to an impending economic crash. The Ukrainian conflict, with its potential to disrupt global supply chains, impede trade, and escalate tensions among major powers, has the capacity to create a ripple effect across economies. Kiyosaki asserts that such conflicts can undermine investor confidence, leading to market volatility and a reduction in international investments, ultimately destabilizing the global economic landscape. Furthermore, the persistent impact of the pandemic is another significant aspect of Kiyosaki's economic analysis. He points out that the pandemic has exposed vulnerabilities in various sectors, disrupting businesses, supply chains, and labor markets on an unprecedented scale. The resulting economic uncertainty has led to cautious consumer behavior and reduced spending, directly impacting the growth of economies.
I want to talk to you about the most important subject for all of us today, rich, young, poor, or old. It's called financial education. And as you know, our school systems teach us nothing about money. Nothing. It's pathetic. You know, they have financial literacy courses today. Well, that's not financial education. You know, it's really pathetic.
In Robert Kiyosaki's view, the prevalence of financial illiteracy is a critical factor that magnifies the potential impact of an economic crisis. He stresses that many individuals lack the necessary understanding of basic financial concepts, leaving them vulnerable to the turbulence that can accompany economic downturns. Kiyosaki believes that without proper financial education, people might make hasty decisions driven by fear or uncertainty, such as selling off assets at the wrong time, making impulsive investment choices, or falling into debt traps. Financial illiteracy also contributes to the cycle of debt that Kiyosaki warns against. Individuals who lack the knowledge to manage their finances effectively might resort to borrowing without understanding the long-term consequences. This can result in accumulating debt that becomes increasingly difficult to repay, especially during times of economic instability. Moreover, Kiyosaki emphasizes that financial literacy empowers individuals to make informed decisions and take control of their financial well-being. By understanding concepts like budgeting, investing, and risk management, individuals can better navigate economic challenges and position themselves for long-term success. Kiyosaki's call to action is clear: invest in your financial education, seek out resources that enhance your understanding of money matters, and equip yourself with the tools to weather the storms that may come with economic uncertainty. As we conclude our exploration of Robert Kiyosaki's thoughts on the economy, precious metals, and financial literacy, it's evident that his perspective offers valuable insights for individuals seeking to safeguard their financial well-being. Kiyosaki's emphasis on the potential economic challenges ahead serves as a wake-up call, urging us to prepare ourselves for the unpredictable twists that may lie on the horizon. In these times of global turmoil, Kiyosaki's recommendations take center stage. First and foremost, establishing a small emergency fund is crucial. Having a financial safety net can provide peace of mind and help mitigate the impact of unexpected events. Secondly, investing in our financial education equips us with the tools to make informed decisions, whether it's managing debt, exploring investment options, or understanding economic trends. Lastly, being prepared for a potential economic crash means acknowledging the uncertainties and taking proactive steps. While no one can predict the future with absolute certainty, embracing the principles of sound money management, diversification, and long-term planning can serve as a solid foundation for weathering economic storms. Remember, the goal is not to be fueled by fear, but rather to be empowered by knowledge. Robert Kiyosaki's insights encourage us to face challenges head-on, armed with the understanding that preparation, education, and the right mindset can make a significant difference in our financial journey. Thank you for joining us in this insightful discussion. If you found value in this video, don't forget to give it a thumbs up and subscribe for more enlightening content on finance, economics, and personal growth. Stay proactive, stay informed, and let's navigate these uncertain waters together.